Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we have a finished 5-wave impulsive structure to the upside in a wave 1, looking for a wave 2 and then continuation to the upside in a wave 3, 4 and a wave 5. The most common target for your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of your wave 1, giving you a target between 64.2k and 59.8k. The 382 has been touched, sitting at 66k, though that is an uncommon target for a wave 2. The 886 is very rare at 58.2k and the invalidation is 56.5k. Preferably, this wave 2 takes more time, as it is most common for a wave 2 to finish at least after the 0.382 Fib time, taken from the start to the end of the first impulse to the upside. The 382 is sitting on Friday the 21st of June. The bearish scenario is a bigger expanding flat structure. Here we have a 3-wave structure to the downside in a wave A, and we look for a double zigzag WXY in B. Wave B in a flat structure is most commonly part of the zigzag family, either a simple zigzag in an ABC, a double zigzag in a WXY, or even a triple zigzag, but a triple zigzag in a WXYXZ is very rare. So here we're looking for a double zigzag. ABC to the upside in a wave W, looking for a wave X to the downside, possibly a flat AB, looking for a 5-wave move to the downside in a wave C, so preferably we still take out the local low at least once in this scenario, and then look for another zigzag to the upside in an ABC towards the most common target area for a wave B in an expanding flat, which is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of your wave A, giving you a target between 77.9k and 80.4k. The 1.618 is a very rare target for a wave B at 84.5k and would lower the probabilities for this scenario if price can make it that high. Inside wave B, the double zigzag working on wave X. Common target for X is the 382 to the golden pocket, 66k to 62.4k. If price moves to the downside and touches the 0.7 Fibonacci taken from the low to the high of W, this scenario will significantly reduce in probabilities, as for a wave X in a double zigzag WXY, the 0.7 is a rare target at 61.1k. After a zigzag up in wave Y to finish B, we then look for an impulsive move to the downside in a wave C, moving below wave A at 56k. The bearish scenario is a direct further move to the downside in a bigger W, X and then a wave Y. In this case, we might not first take the high, we might possibly first take the low. Here we have a flat in wave W, a flat in wave X, and wave Y is most commonly a zigzag in a 5-3-5, which means that locally, preferably, we take the low at least one more time. Here, the common target area for your wave Y is between the 0.618 and the 1.236 trend-based Fib extension, taken from the start to the end of W to the end of wave X, giving you a target between 63.2k and 54.3k. The 1.618 is an extension target at 48.9k and is rare for a wave Y. What does lower the probabilities for this scenario is wave C inside wave X. In wave X, we have an expanding flat, wave A, B, and then a 5-wave is C to the upside. However, the moment a wave C is ending after the 2 Fib time taken from the start of wave A to the end of wave B, so in other words, if wave C is twice the length of A plus B, it significantly lowers the probabilities that this move to the upside is a wave C, which therefore decreases probabilities for this scenario compared to the more bullish scenarios where you're taking out that high first. Considering time, preferably this wave Y is finishing at least after the 0.382 Fib time taken from the start to the end of W to the end of wave X, giving you a target of Friday the 21st of June. The bullish scenario locally is a 3-wave structure to the downside in a wave A, B and a wave C. The most common target area for a wave C is between the 1 and the 1.236 trend-based Fib extension, taken from the high to the low of A to the high of wave B. An extension target, still quite common, is the 1.618 at 64.2k. The low over here took the low of this range at 66.2k, and in this scenario preferably you start to move to the upside or make one more low but then create a bit of a bigger bounce towards the upside. In the bearish scenario, however, we want to continue to the downside, looking for a wave 1, a 2, eventually a 3, 4 and a wave 5. The most common target area for your wave 4 is between the 382 and the 05 Fibonacci, taken from the high of 2 to the low that we have on the chart over here, giving you a target between 67.6k and 68.1k. The invalidation for a wave 4 is the 0.618 at 68.6k. So if price would move to the upside and touch the 0.618 before taking out the low, it will increase the probabilities for an ABC towards the downside. On the 15-minute time frame, price moved to the upside and created a high. After that, we've been raging sideways, touching the 886 many times, increasing the probabilities that locally price will still take out this high. Now we do have some important news coming later today. So what I think could be quite interesting is this move up looking like a three-wavy structure, possibly creating a bit of a range, a continuation of the range here locally, and then during the news grab the highs to then possibly continue towards the downside to take the low. Of course, keeping in mind that if price is moving to the upside touching 68.6k, these probabilities do change. With regards to CVD divergences, we have some bullish CVD divergences here. We started at the low, higher low in price, lower low on the CVD. Second time over here as well, hasn't yet played out because the target would be this high. And with this move to the downside, we also again have some bullish CVD. But locally, we also have a bit of bearish CVD. Lower high in price, higher high on the CVD. Just to show you here, higher low in price, lower low in yellow as well as blue, and you can see blue continues to move to the downside as price is moving up. However, locally here we have a lower high in price, higher high on the yellow line, which is a bearish CVD. What is interesting is that on my chart this high hasn't been taken, but on the CVD chart it has been taken, as you can see here, higher high on price. So therefore I do not count the bearish CVD that we have between the pivot here and, for example, the high here on the CVD, because on my chart we have lower highs, but on AGGR we already took the high. So I can only take this CVD divergence into account. The target for this smaller bearish CVD divergence is taking this low. Now, as mentioned, we have some important news coming today, Wednesday, June 12th at 2:30 p.m. Central European Time. We have some high impact news as well as around 8 to 8:30 p.m. Central European Time. So make sure you trade safe. And if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bullish scenarios, either an impulse or a flat, with the bearish WXY on the number 2 spot. On the 1 hour time frame, the probabilities are higher to continue to the downside and look for the lows unless 68.6k is hit. That will change the probabilities. Therefore, on number 2, we have the zigzag, the bullish scenario, and ABC towards the downside. But if we do move to the upside here and hit 68.6k, keep in mind that it might not be a finished corrective structure. A zigzag can be only a first structure of a bigger three-wave sideways move to possibly finish after the 0.382 that we've been talking about in this video. On the 15-minute time frame, the probabilities at the moment would be higher for price to sooner or later take out the highs due to the 886 touches that we have locally before taking out the low at 66k, and therefore on the number 2 spot we have taking the lows first before taking the highs to continue an impulse to the downside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.